Well, Dubai World negotiating with creditors as investors monitor the fallout from the debt mess. Our next guest says a ripple effect could be felt by global banks, especially in emerging markets. Uri Landesman is the head of global growth for ING. He's joining us. Thank you so much for being with us. Okay, so it looks as if, judging from the market reaction, that this is well contained and so, the fears are subsiding. Are you? I mean, did you? Is it surprising to you that it subsided so quickly?
I didn't know how quickly it was going to subside. I think we've gotten some substantive good news, maybe a little quicker than we thought.
About the debt restructuring.
Correct. I mean, I think they realized that putting out a very vague press release 5 minutes before everybody was leaving for a holiday weekend in the U.S. maybe wasn't so smart, and I think they've moved quickly to show that this is something that can be handled.
So given that then, and this doesn't damp your enthusiasm for emerging markets, I mean, you've been quite bullish about them.
Yeah, I've been quite bullish and continue to be quite bullish. What I think is interesting, though, was the magnitude of the reaction to what happened. And because of that, it shows you that investor confidence is shaky. And so every time some piece of bad news comes up, investors need to expect a fairly quick reaction.
Uri, are there any markets around the world where leaders are seeing what's happening in Dubai, seeing the restructuring and saying, hey, maybe we can try that too?
I don't know that anybody had anywhere near the debt level that a Dubai World did or that Dubai did as an entire country, but I think that any world leader would be foolish not to take a very, very close look at their own house in the reflection upon what happened in Dubai.
And yet, though, I mean, following what happened in Dubai, you saw the UK papers, for instance, just they all sort of went on top of it and talked about the British government. I mean, I think the UK GDP is running, the debt is running at 60% of GDP right now. Is that the next one to crash?
It would very much surprise me if we have anything in the UK precisely like what happened in Dubai World. But that said, I think we will see more private, smaller types of restructurings going on throughout the world as a result of what we just saw last week.
Now, Uri, last week, Wednesday, Thursday, Friday, we saw the credit default swaps for other countries so far removed from Dubai, like Latvia, like Iceland, et cetera, South Korea, up 23%. Is that just a knee-jerk, or is there an actual legitimate reason for that much concern to manifest itself?
Yes and yes. So it was a knee-jerk, but what it did is it caused people to take another look at emerging markets, and to some extent, secondary and tertiary emerging markets are related to each other. And so people said if it could happen there, maybe it could happen here. Ergo, the amount we're going to charge for insurance against that has to go up.
Okay, Uri, that's all the time that we have. But thank you very much for joining us, Uri Landesman of ING.